Well, I'm very excited about this part of Erickson University as it addresses one of the top questions that I get from newer clients, but also from some of our longer-term clients who have told me in the past that they don't totally understand how to read their quarterly investment statements. Now, this is part one of two classes that we're presenting at Erickson University. The first one is going to be on the custodial statement. And so on this first slide, you'll see Trust Company of America statement, which means that this is the custodian of your account. And part B, which will be a second class, will be the Madison Money statement, client statement. And that this order is done purposely because this is the order that you receive your statements. Generally, you'll receive your Trust Company of America statement probably about 2 weeks, within 2 weeks of the quarter, at the end of the month ending of the quarter, because these statements come out every quarter. And then the Madison Money statement will come out roughly about another week later, and that's the order of them. Purposely, these numbers have to match on most statements, and that's part of the protection of your account because these statements are coming from two different sources. The first source, of course, is Trust Company of America, which is your custodian that's hired to protect your money, and then the Madison Money provides additional performance reporting. Now, if you flip to page 2 of your of the slide and of your statement, you'll see some basic information such as the account number, which on this one it's whited out, and then also what type of account it is, which will say, this one, for instance, is IRA. It could also be a Roth IRA, it could be a custodial joint account, it could be a transfer on death account, it could be a trust account, it could be a corporate account, it could be a consolidated account that summarizes all of your accounts. So this was where you look to see what type of account we're actually looking at. And then the key thing is the date below that, which is showing the quarter that we're reporting on. So for this example, we're reporting on October 1st, 2013 through December 31st, 2013. Now we go over to the third slide, and you'll see some basic information. You're going to always see, if there's any messages from Trust Company of America, they'll put that in the upper left-hand column. And then you'll see below that the investment advisor, which is always going to be Madison Money Incorporated. And then that's our co-advisor, and then of course you'll see representative, which would be me, which is Curtis Erickson, and of course our respective addresses. Now, if you flip over to the next slide, you'll start seeing some numbers for if you're looking at your statement, it'll show numbers of your respective accounts. This one is showing, of course, in that left box, the current period information from the last quarter reported, which is October 1st of 2013 to December 31st, 2013. And then, of course, the column to the right is going to always be year-to-date for that year. So that'll be year-to-date 2013, which is for the entire year of 2013. It's always going to show the beginning balance or beginning value of that period. And then you're going to see kind of a subcategory of different things that impact the balance of the account. You're going to see additions, which will be, for instance, if you've transferred any new cash or assets into the portfolio for that time period. And then the next section will be withdrawals, and this will be distributions that you would be taking out of your portfolio. If you've had any taxes withheld, that'll be shown separately. And then we'll get down to investment income and expenses. And this is broken out between the three main categories for income, which are interest income earned, dividends earned, and then mutual fund capital distributions earned. And for this account, you can see that the interest was very nominal, and then the dividends for the quarter and the mutual fund capital gain distributions was pretty substantial. And then we have negative numbers which show the custodian fee, and this is actually the fee that Trust Company of America charges quarterly and then to the right annually to do two things. It provides the custody of your assets, protects them, also provides the errors and omission insurance of $40 million per year. It also it gives us the ability to rebalance your account without additional trading fees, and so that's what this fee is for. And the rebalancing is very important. We're not doing a presentation on rebalancing. That'll be later in Erickson University, but that's a crucial part of how we manage your portfolio. So this is the total fees that are charged. And then our advisor fee is shown but for that current quarter and then for the year. And those summarize into the next part of your portfolio. Then the last area is where it says net change in market value. And that is what the appreciation for that quarter is and year to date. And then if it's showing a negative balance, that means we've had a temporary decline in the market conditions, and so that'll show a negative balance. So if you add up all those main subcategories, starting off with your beginning value, then any additions as an add addition, then take any withdrawals as a negative or minus, and then do the net investment income and expenses. In this case, it's a positive $18,631.47. Add a positive net change in market value, and that's how we get to the ending value for the portfolio. Now, to the right, you'll see the asset allocation chart in that box, and that's showing a very basic breakdown of the how the account is allocated between cash, to the right, equities, foreign, or another term for the stock index funds, fixed income, which is the lower quartile, and then the stock or equity domestic on the left quartile. And when you get the eventual Mets and money statement, you're going to see a lot more detail about how those are broken down, because we actually have 19 different asset categories in 45 different countries, and so you'll see that in the Mets and money portfolio statement. And then down below where it says asset summary, that just again shows you in numbers the breakdown between the fixed income fund, the international equity fund, and the U.S. equity fund. It does show cost basis and the market value. Cost basis is kind of important, especially if this is a taxable account, because that'll give us an idea what the tax cost is on what if we sell a portion of your portfolio, and the tax impact. But you don't have to really worry about that. For the IRA, again, you don't have to worry about that either. So going over to the next slide, you'll see another summary at the top, which is asset summary by funds, and then how the total is arrived at. But the next thing is you'll see it starting at the middle of the page, transaction details, and this will actually show you reinvested dividends, distributions taken out, any type of stock purchases, stock fund purchases or trades. And this one you'll see sold. And the reason we're doing the sold is this is the way that we rebalance. And so you can see that there was some sold this last quarter, and those are actually rebalancing techniques. And so and part of it also was to fund the distribution. So that's how we do that. Go to the next page, you'll see some more detail. And again, you're going to see some reinvested dividends, the banker's interest coming through, and you'll see long-term capital gains. Anytime there's positive income, such as bank interest, long-term capital gains, dividends, we always reinvest those and buy more shares for you. The other thing we do is when we rebalance, we also will buy shares as certain asset classes are cheaper and sell some as certain asset classes are higher. Then at the very bottom, you'll see something called realized gain or loss. This is going to be different. This is going to be actually the realized gain and loss from selling a portfolio during that time period. And so this means that this will often show zero because we don't sell specifically until a client needs a distribution. Sometimes we'll do some rebalancing, and that will cause a small realized gain or loss. But our goal is to limit these realized gains and losses as much as possible. But as an indication that you could, if you remember on the previous page, the client took out something like 56,000 of withdrawals, but only of that, only about 18,410 was realized gains. So that's one way we tax manage the portfolio. The last page is the fee statement, and this is just a breakdown of the fees that were charged for the last quarter. And again, it's broken out between the custodian fee for all the things the custodian does, including protecting your assets and also for trading, rebalancing. And the last one is our advisor fee, again, that was charged for the quarter. Now, that advisor fee that was charged during the quarter is always charged in arrears. What that means is that it was based on the previous balance at September 30th of 2013. And the fee that's going to be charged for at the end of December 31, 2013 will show up on the next quarter statement because it won't be paid till January. And I want to thank you for going through this first episode of Erickson University on custodian statements, and I hope you have a little bit better understanding about how to read these. The next one, Part B, is going to be the Mats and Money portion of the statement, which I'm very excited to show you because it has a lot more reporting enhancements. Thank you.